So I'm joined in the studio by the lovely Felix Milton. Good morning.
Good morning.
How are you?
Very well, thank you.
First of all, happy birthday for the other day.
Thank you.
I see you celebrated rather well.
Yes, no, it was good. It was good.
Excellent. So today we're kind of touching on a few subjects today. So tell everybody, what is it we're going to be talking about?
So we're going to be talking about today why you should invest over the longer term and what it could do for you in the end. So that's really the broad topic that we're going to talk about. But there's a few little things within that we'd like to explore further.
Right, okay. So explain, so investing. When you say investing in longer term, what's the best way to invest in, if you wanted to put your money into something which will last longer, where's the best areas to do that?
So typically there's different assets you can invest in, but if you're investing for, say, your future when you want to access the money that you've saved, probably best to put it in a pension if it's for your retirement. So that's the best sort of long-term savings vehicle you've got, because when you put into it, the government puts into it too. And everyone's going to be thinking, I harp on about pensions a lot, but that's because they're great and they're really important for your overall retirement strategy, if you like. So saving into a pension for the longer term is the first step, and then what you buy within that pension is the next consideration. So typically you should buy stocks and shares, because over a rolling 30-year period, I can't remember the exact statistics, but it's something like since 1900, if you invested on any given day and then left your money for 30 years, you would have made money if it was invested on a global basis.
Right,
so there's more, the caveat that survey is off the top of my head, I can't remember the exact one, but generally investing in the stock market has always outperformed cash. So as long as you leave it long enough, and if those are starting their careers now, 30 years time when they look to think about retiring, that's a very positive outcome for them. So you should definitely consider investing.
So is it better to go, so a lot of people have who work with companies will have a company pension.
Yes.
They still go. Is it worth taking out a separate pension as well? So you've got two, or would you just go with the company one? Which would be the best avenue to go down?
Well, firstly, your company one is the best one to go down, because when you pay into that one, your employer will pay in too. And it's always worth looking at how much your employer will put into the pension as well. So lots of, especially the larger employers in the country, will have a match scheme. So say the employee saves 10%, the employer might save 10%, but that's a very generous arrangement. However, if you're saving that much, it's effectively like the employer is going to give you an extra 10% pay rise that you wouldn't have otherwise had, because they won't pay it to you if you don't pay into the pension. They'll keep it themselves. So paying into a pension is a very valuable benefit, and it's something that you should look at firstly. And then if you do want to save more, and perhaps you don't like the underlying funds that are offered within your employer's pension, then you could consider opening another one to run alongside it that you manage yourself, for example.
So if somebody was going to do that, so they've got their work pension, would it be better for them then, instead of opening up another pension, to maybe look into stocks and shares and going down that route alongside their work pension?
Well, they could do, yes, but they could also do those stocks and shares potentially inside their work pension, but it would depend on the features of the work pension. And lots of them are very basic arrangements that don't offer all the features you may want, so it's important just to check what they can offer. But again, if you have other pensions from previous workplaces, you may be able to pay into one of those. If you don't work there anymore and it becomes what's called paid up, you may be able to sort of restart it and manage that one yourself and pay into that one. So there's a whole host of options to consider.
So I know I've heard of cases before where sadly people have passed away, and people have tried to find if they were on a works pension, but maybe that company doesn't exist anymore. How would somebody be able to find out if there was anything there, for anything there left in a pot somewhere? So
there is a service that the government sponsor called the Pension Tracing Service. So you can find that on the gov.uk website, and you should be able to, if you've got you have to have a bit of information. You have to sort of know roughly what you're looking for, and then you can type in, you think it was with this company, and then it will tell you what has happened to the pension scheme since, if there's any contact, who to go to. So there is a service out there where you can trace it, and it's important to do that. I mean, you ideally want to claim it as well within 2 years of death. So because otherwise you lose some of the associated tax benefits of it. So it does make sense to explore that as soon as possible. And even if it is past that 2-year period, still look into it, because there may be something there, and something, of course, is better than nothing.
Absolutely. And I think sometimes that the most important thing is to make sure that everything is written down, or you've got copies of everything, like your pension.
Yes, and keeping just the annual statement or something like that, and putting it away in a drawer, even if you're not caring about it because your retirement's very, very far away. Just keeping it as there is a record does help.
Yeah, absolutely. Right. We're going to have a song now, and we're going to come back after the song. Is that okay?
That's fine.
And we're going to talk more about how we can help our listeners improve their pensions.
There we go.
So I've got the lovely Felix Milton in the studio today, and we're talking finance, we're talking pensions. Now, one of the statistics I've seen, Felix, is that women generally don't save as much as men. Is there a reason for this, do you think?
So historically, there have been lots of sort of barriers in place for women investing. I mean, it sort of stems back to, say, the traditional 50s sort of family lifestyle where the man would be the breadwinner and the woman would stay at home and work. And because the man had all the money, the man typically invested and saved and the woman didn't. So that's what it stems from. But it's actually still problematic today where women generally save less than men and invest less. And actually in the future, that's going to be really detrimental to women's retirement prospects. So there's a whole host of other reasons as well, but generally women are considered to be more risk averse than men and prefer cash over stocks and shares. But that doesn't necessarily follow through as logical, although when women do invest, there have been studies to say they are better investors than men. So there's a huge gap there in terms of saving and the difference between what men and women save. And definitely women in particular should be looking at saving as much as they can or more, because typically men save more anyway. And I don't know why that is. There's probably a whole host of other reasons, but especially if you are a woman, making sure you are saving the right amount and into the right things is very important.
Yeah, I think talking as a woman, and I'm really quite frightened about a lot of the things about money in general. I don't understand it all to start off with, but also I worry about scams and things like that. So I worry that maybe I'll put it into some kind of share and then it will be a really dodgy one and I've lost all my money. Do you think that is something that's quite common for women, or is that common in men as well? What's the best way to do that?
I say worrying about a total loss is something that generally affects both genders, if you like, in that both people, both sexes, if you like, will be worried about what if they put it in this one company and it goes bust, like say Thomas Cook recently as an example. But it's important to remember that if you are investing, you're not investing in just one company. You're spreading your money over a very wide variety of things, and trying to have diversity within there to mitigate the chance of any one company going bust. So there is a risk of total loss, but if you're investing sensibly and you're investing, say, within funds, which invest in lots of other companies themselves, you should protect your money better over the long term than picking individual stocks. So investing with funds, if you don't know what you're doing yourself and want someone else to manage it, just checking what that fund does and it's doing the right thing is probably the best way to go about it.
So maybe coming to see somebody like yourself who can explain it in black and white, rather than looking online, because there are people out there. Now I'm going to say it, there are scammers out there, and they will call you and try to get you to invest in something that doesn't always exist.
Yes, they will, and these types of things do exist. Generally, if you're cold called offering a free pension review or something to do with your finances or a great investment opportunity, it's probably going to be a scam, because most legitimate outfits, if you like, won't cold call you out the blue and say, look, you should put your money here. So it's always important to double check, and even if you're unsure, get a second opinion. I mean, our firm are happy to give our opinion on any scams. We don't charge anything for that. If you think, I might do this and part with a significant portion of your money, just get someone to look over it just to be sure that you are doing something that's either regulated, or if there is a scam, you want to be forewarned. So it definitely makes sense to have a second pair of eyes look over it.
Exactly. And I think as well, social media, because you see adverts pop up, don't you? So,
yes.
There was one I saw the other day and it said, so-and-so became a massive Bitcoin dealer and is now making millions. And then you see all these comments and I'm sat there thinking, no, this can't be true. This has got to be some kind of scam, which I'm guessing generally they are. But people do get sucked in because they see these adverts and they think, I want that lifestyle.
Well, I can give you an example of a client who inherited £200,000, saw an advert on social media for Bitcoin when it was the peak of sort of the bubble in 2017, and basically parted with all their money, and the firm was a South African outfit, and the police couldn't really do anything, and that's it, the money went. So these things do happen out there, and people do fall for these scams. So just check if it seems too good to be true, or the returns promised are far too high than anything else, it probably is a scam. So
Yeah.
just be wary with your money.
Oh wow! Thank you, because that does clarify it for me as well. Because I get quite I said earlier, I get quite frightened because I see this and I think there are going to be vulnerable people out there that maybe are a bit cash up and they've got this little bit and they think, do you know what, I'm going to invest it. The best thing to do, as always, to come and see somebody like yourself.
Yes, or if you want to do it yourself, just check they're regulated by the Financial Conduct Authority. Now, there's a public register that you can search on their website, and you can type in the name of firms. Now, this register is quite good because it will also tell you if a firm is posing as a registered firm. So occasionally you will get legitimate firms, but then you'll get scammers calling themselves the name of the legitimate firm, but the register usually flags if there is, and just to be cautious. So definitely check. They are regulated by the Financial Conduct Authority if you are going to be making any investments with your money.
Fantastic. So all in all, rounding up today's talk is always invest into your pension.
Yes.
Always seek advice if you're not sure.
Yes.
And start saving.
Yes, and save as much as you can because it's going to benefit you in the future.
Definitely. Felix, thank you so much for coming in today. I'm sure we're going to have quite a few questions coming through to the studio, but I look forward to seeing you in 3 weeks' time.
Thank you very much.
Take care.